Hello again, friends. Carlos Scarpero here, VA mortgage specialist with Epic Lending and Military Mortgage Boot Camp. Today, I want to talk about the VA occupancy rule. In particular, the 60-day rule and the 12-month rule. People get really confused on what this rule actually means and how it works. And so I want to explain a little bit about how it works. And we're using the VA pamphlet 26-7, which is the VA handbook, the VA Bible for us loan officers. I'm in chapter 3, section 5, if you want to follow along. I don't know if you want to, but if you do, the section is the law on occupancy, and specifically says the law on occupancy. The law requires a veteran obtaining a VA guaranteed loan to certify that he or she intends to personally occupy the property as his or her home. In other words, it can't be a rental house when you move in. Upon completion of the loan and acquisition of the dwelling, to personally move into the property in a reasonable, keyword being reasonable, amount of time. Section B, which is really interesting, says what is a reasonable amount of time? They really spell it out in section B. Occupancy within a reasonable time means within 60 days after the loan closing. Interesting. More than 60 days may be considered reasonable if both of the following conditions are met. One, the veteran certifies that he or she will personally occupy the property as his or her home at a specific date after loan closing. Two, there is a particular specific event that will make it possible for the veteran to personally occupy the property as his or her home on a specific date. Section 3, occupancy at a date beyond 12 months is generally not considered reasonable by the VA. And then Section C is interesting because you can also have your spouse fulfill that obligation. So maybe you can't qualify within 60 days or within 12 months, but your spouse can, because that basically says if the veteran can't qualify based on that, you can have the spouse or dependent child satisfy that on your behalf. So let's discuss this a little bit and talk about some real world examples of the 6 month and the 12-month rule. The 60-day rule, pretty simple. It's just like any other loan. If you can get in within 60 days, that's ideal, but we know that things aren't always ideal. So what would qualify as a particular event? The main ones are PCS orders. So, for example, I've talked to a lot of people saying, well, I'm going to write PAT at some date in the future, but we're not sure exactly. It might be 2 months, might be 3 months, might be 4 months. Okay, well, give us a guideline of what that's going to be. Get us some paperwork from your commanding officer saying what that date's going to be, that type of thing. Obviously, if it's more than 12 months, then it's not considered reasonable. But if it's within 12 months and it's more than 60 days, then that is perfectly reasonable on that rule. Now, also consider that active duty service members that are deployed have a whole different rule that you don't even have to fulfill this, because active duty is actually considered temporary when you're deployed overseas somewhere. So this rule doesn't apply at all. If you're deployed in Iraq and you know that you're going to move into the house after you get out of your deployment, you can actually buy a house beyond that 60-day rule. So keep that in mind as well. So that is the rule on occupancy, the 60-day and the 12-month rule. As always, if you have any questions, feel free to give me a call. My number is 937-572-3713. I am licensed in several states. I'm based here in Ohio, but I'm licensed in 8 states currently, about to add a 9th one. You can also visit my website at Scarpero.com. If you're outside of areas where I'm licensed, I'm connected to loan officers all around the country that can help. I look forward to talking to you soon. Bye.